All right, welcome to Options Tender. Here it's the weekend. We want to give a supplemental video for all the beginners and novices, or maybe you're just not familiar with the options market in general and you want to jump into options. That's what we do here on Options Tender. You can trade stocks and follow me as well, but options is our key. So if you like this information, subscribe, hit the notification, like these videos. That's how the algorithms work with YouTube and Twitter and all these social media. So we want to spread the word and spread the wealth. Any of this information, if you find it useful, please help us out and do those things. So let's dive into it. We have the options expected move, which we outline to check out our week ahead to see what kind of trading range we're gonna be in, what the market is doing. There's many nuances to it. And we can also decipher the past moves as well for the options expected moves. So in order to get this information, let me just show you, well, let me explain first that, the SPX, SPY, and ES all track each other. The SPX is the largest indices out there with the amount of order flow that goes through it. So it's super important to follow the SPX, which the SPY tracks, and the futures as well. That's why they control what the market does, what SPX does. All the markets are influenced by it. So that's why it's so important. So here we go. If you jump into the trade tab here on Thinkorswim, on Friday, January 15th, we look at what the options expected move is for the week. We don't want Wednesday, we don't want Monday, we want Friday, because these large companies, these large trading companies, make their roll over their hedges every single week and outline what happens. We'll get into that a little bit later, but we have the plus or minus 70, we'll call it 72 points. Go over to our chart, and what we did here is we hand drawn each and every one of these lines. Been doing it for some time now. I got this, I learned this off of Theo Trade. I definitely want to give them credit for this. This is not something that I made up, but it's a great way to follow and to see what the market's going to do for the next week. So what we did here, I'll just show you an example. This is last week. We had about an 83, I believe, somewhere in the 80s for the range. Here's the start of the week, this white line. It's right where the week ended before. So that's where we're starting. The options market depicted whether it was predicting it would go plus or minus, let's call it 85 points, to the upside or to the downside. And what did the market do? It immediately on Monday went to the downside. And because these large companies hedge, as soon as price got outside of there, they hedge and hedge and hedge. All the machines kick on, the algorithms, and price goes right back up. Actually, in this case, launched almost back to the upper side. But what it wants to do, it wants to keep price in between these two areas. And it's just probable that we're going to touch the top or the bottom. In this case, almost both. So that's why it's so important. It's happened over and over. And let me go on to the 65-minute chart just to dig in a little bit deeper, just to show you how accurate this is. We started off the week, almost hit the upper range, hit that to the penny, the lower range. Didn't quite make it up there, but we stayed within range. Hit that lower range, came back in. Hit that upper range, came back in. End of the week, and here's how we started the next week, right on the bottom edge of the expected move. So just this happens over and over and over. Now, I haven't been doing it as long as those guys over at Theo Trade, but yeah, I've been doing it since, 2019. I've been trading since before that, but I didn't watch the options market for that long. Now, we talked about order flow. We talked about the SPX, SPY, and ES. Now, we use them as guidelines. We talked about that. So this upcoming week, We're ending here at 38.25 approximately. And we have an expected move of, what did it say? 72 points. So we start here. We are likely to trade 72 points higher or 72 points lower. We know this is a bull market. We think the probability is that we'll hit this upper edge. Everything's moving up right now. So that's kind of where our eyes go. But this could very well pull back Monday. It could pull back the first couple days and then hit that upper range. We don't know that. We have other indicators that will assist on that. But that gives us our playing field. Now, some of the nuances with that. If you notice, these expected moves change size. They get tighter and tighter. And then as news events come up or as volatility increases, it pops up into a bigger range. Okay, so we had all that news last week. We had 80-some point move to the downside and to the upside, and we nearly hit 150, 160 points by hitting the downside and almost coming back to the upside. And this week, the range gets a little bit smaller, indicating to us that volatility is decreasing somewhat. So we'll see how things play. Let's look back for another example here. Now, as volatility usually increases as price goes down in the market. It's sort of a fear indicator. So as price started to dip way back here, you notice, wow, we had the ranges get much wider until they are so large. Look at that. That's a 3,100 to 34. That's a 300 point range. So a lot of fear there. And then boom, price spikes to the upside and volatility decreases some more. We had a little bit of an increase here, but notice that if we continue to drive, especially if we the ranges, if we start to grind to the upside or shoot to the upside, you'll notice this range getting smaller and smaller. I've seen it, my gosh, and sometimes I've seen 15-point ranges. Sometimes that's so tight of a range, it's grueling. So that's why we trade with the market. Notice everything is moving to the upside. Volatility is decreasing. We think we have a lot more upside, and you can watch that in the weekend updates that I just put out or in the future. We're headed to the upside. So we want to trade with the market. That's why I'm always talking about calls. We're talking about all these calls. Why is he always bullish? Why is he? Well, the market's bullish and the order flow is bullish. Everything's bullish. So we want to trade with the wind behind our backs. Okay, that's everything that I pretty much wanted to cover. The expected move is very important to us here at Options Tender. And I hope you like this information. Again, follow us. We do this every morning, every aftermarket, and on the weekends. So thanks for joining us here at Options Center. All right, bye-bye.